Oil rose to go past $110 per barrel on Tuesday as investors weighed the stalemate in the Iran conflict. The back and forth between Iran and the US on the peace talks is not sitting well with energy markets, and the 2-month-long conflict remains in a stalemate with energy and other supplies through the critical Strait of Hormuz at a complete standstill.
Right now is an oil supply shock with 10% of the global energy of the market. So now that oil supply shock is getting into fertilizer, so it's coming into the food chain, and it is getting into current account deficit. So all those things, second order effects are now coming through. I would say markets are complacent, governments are not, but governments are kicking the can down the road. They're trying to hold the line on inflation by not passing through the energy costs, as we have seen even in India.
Benchmark Brent crude rose to a high above $110 per barrel on Tuesday, rising for a sixth straight session. Energy markets have been on edge since the start of the Iran war 2 months ago. Over the past week, the wild gyrations is a direct reflection of the broad uncertainty in West Asia. Brent has surged from about $60 per barrel at the start of the year to nearly $110 due to the Iran war. At one point during this war, just last month, the benchmark had even surged to about $120 per barrel, but has since leveled off. Analysts say Brent could possibly revisit that $120 a barrel rate as soon as this week if the Hormuz blockade continues.
What we are getting right now is an oil supply shock with 10% of the global energy of the market. So now that oil supply shock is getting into fertilizer, so it's coming into the food chain, and it is getting into current account deficit. So all those things, second order effects are now coming through. I would say markets are complacent, governments are not, but governments are kicking the can down the road. They're trying to hold the line on inflation by not passing through the energy costs, as we have seen even in India.
As investors assessed the geopolitical upheaval in West Asia and prepared for mega cap results and a series of meetings with central banks, the dollar held up slightly. Global stocks held their ground and hovered near record highs on Tuesday, even as Wall Street futures pointed to a lower open. US stocks had eked out modest gains in the previous session after surging to new records. Gold turned red after the Bank of Japan's hawkish hold, paving the way for other key central banks to do the same this week. Bitcoin reversed early gains to decline slightly, tracking withdrawal from risk assets.
Markets are at record highs across the world. But for this energy supply disruption, the markets would have factored in the Iranian war by now, given that it's the second month that has got completed. So overall, this week, we have a lot of central bank action. Today, we have the Bank of Japan. Then on Wednesday, we have Fed and the Bank of Canada. And Thursday, the Bank of England and ECB meet. So markets will be looking at the commentary. We don't expect any change in stance or in the rates tomorrow across this week. Then